Hi everyone, welcome to our Commitment of Traders webinar, how to use Commitment of Traders in order to get more, we can say, um, in order to help you have a valuable insight in regards to the market trends and any potential price movements and market sentiment as well. Let's not forget that. It's something that I have repeated, yeah, if I'm not mistaken, early last month. But because there was a lot of interaction, I decided to repeat it once again. So before we start, I would like someone to confirm whether you can hear me, see me, see also my PowerPoint, my screen, and just to have a quick confirmation from you guys in regards to the audio and in regards to the display as well. So I need to upload the PDF as well. Give me a second for that. So, okay, webinar. Sorry for that. I forgot to upload the PDF version of this webinar, and it's done. Okay, it's on the handle section. So yes, all in order. Yes, I can hear you. Perfect. Okay, so we can start then. I need to go through the disclaimer warning. This matter is provided as general marketing communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and information containing an indication of past performance is not guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital, and please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. So you can find it on our website along with all the legal documentation that you might need. Oh, thank you, Steve. Thank you, Steve. Thank you, Zora. Thank you, Zimo, for replying and giving me give me a feedback. So we can officially start. Just a quick reminder: this webinar is recorded, so you will receive at the end of the session the recording. Okay, so don't worry about it. It will be sending your email inbox. So just if you cannot see it, double checking the spam folder. Sometimes, unfortunately, it goes into the spam folder. Okay, but it is recorded, so don't worry about it. Another quick reminder: for any help you need, regardless if it's about a webinar topic or if you need any help from us guys, I mean trading related, fundamental related, or you want an explanation about something where the French language occurs. Abdul, we pause it a bit, but it will hopefully soon will be resumed, the French language. As soon as we do that, you're gonna get notified by our social media and our promotions, etc. Okay, so don't worry about it. So if for anything you need, any help you need, please send us an email at webinars@hfmo.com. Okay, thank you. So let's start. Okay, give me a second. Perfect. Okay, what we're gonna cover today? Obviously, I'm gonna explain first of all what the COT stands for. What is the Commitment of Traders Report, and why it is so important, and how we can we how it can help us with it can help us how we can you as traders, guys, you can use this kind of data to aid your trading, sorry. So we're gonna go through how you can read pretty much this kind of data in order to gain as much as many information possible for your trading. Okay, so we're gonna have a bit of a more depth explanation of what the COT report and its significance. Okay, so of course, anytime, please feel free to stick any questions that may occur in the question box, and I will pause a bit the webinar in order to reply to any questions. But yeah, okay, let's start with the basics. What the COT is. Okay. First of all, here I provided where you can find commitment of traders. So this is pretty much a link for the Commodity Futures Trading Commission, who actually provide in a weekly basis the COT report. They have a different versions of it. Okay, they have it as they provide every week, as I said. One, and they are separated per asset class. So for commodities, for metals, for currencies, and etc. So it is split. We're gonna see everything in a bit. We're gonna go through the website as well, and where you can find this kind of data as well. Okay, but first of all, let me briefly let me try to explain what actually the commitment of trader is. Okay, if we just emphasize on the name first of all, okay, you understand that it pretty much shows how the traders, in which way the traders are committed into the market. So it shows the market dynamics. Okay, it shows how the market participants are currently positioned in the website. Actually, not currently, but it's a weekly one. As I'm saying over here, it is published every Friday night, right? And it shows the total positions held by all the market participants in the U.S. future market on the previous Tuesday up to Friday. Okay, so it's pretty much a breakdown of the market participants. Okay, for this period of time, as I just mentioned, from the open of Tuesday up to the next Tuesday. So it's a weekly one. Okay, it's a weekly one. So why it's important? How it can help? I mean, how it can help the market participants, you guys as traders in general, investors or institutional players and etc. How it can help them? So it's a very important report, okay, because it provides exactly because the COT report is based on position data supplied by firms such as foreign brokers, exchange centers, clearing members, and etc. So from the participants, let's say, of the markets. It gives a wider picture on how the long term uh, the long-term traders, let's say, are placed there. Which side, which the side of each asset class, the long-term traders are placed. What I mean? Okay, let's simplify all this once again. So, okay, as I said, it's a historical report first of all, right? Because as we already mentioned, it includes data from previous Tuesday, right? On the open interest for futures and options on future markets from the previous Tuesday up to the next one. So it's a weekly, it's a report that it contains the week's data. Okay. So you can say, but Andrea, how is this helpful, especially for us as intraday traders, scalpers, etc.? It gives you insights in regards to how all these people, and we are referring to institutional players, we're referring to industry professionals, how they are viewing and assessing, okay, each week's data. So it helps you identify the overall potential trend. That sounds a bit bizarre. I know. So the way all these institutional professionals have settled into the market. For example, in that report this week, my show that the most of the institutional players, they started positioning, let's say, long in euro. Just an example, okay? You can see there is a shift every week, and more people and more institutional players are entering into a long position in euro. So this should trigger your attention that these guys obviously they are holding long-term positions, right? So this is something that it could help you, because it gives a hint that for the month or even the quarter, there is the belief that the euro will get up. So having this at the back of your mind, that a possible uptrend for euro could start or is imminent to start, is always on your benefit, because don't remember that the trend is our friend. So having this kind of hint and putting it down as a note, it will help you enter the market on time as soon as the technicals also confirm this kind of shift. Okay. Remember, I will highlight once again that participants in this actually the COT report is based on the position data by reporting firms. So you understand that we are referring to companies and firms that trade millions, okay? Exchange centers, foreign brokers, clearing members, and etc. Big institutional professionals. No, there are also traders like you guys, right? Individual traders, small traders, and they are included in this kind of in this report. Okay, having in mind. But who is driving the market? Can anyone reply on me? Who is driving the market? You guys as small individual players and traders, or the big banks, the clearing members, the who exactly? The institutional players. Exactly, because they trade George Soros. Yeah, I agree partially, but it's not only him. It cannot alone shake the market, but yes. Let's not forget Mr. Trump, and let's not forget and its tweets, and let's not forget Tesla's head and his tweets. But yeah, George Soros is a well-respected professional for sure, and not like not tweeting and etc. So, what else I want to mention in this intro? Guys, other than CFTC, another website. Oh, okay. By the way, yes. Let me send you the link of the Commitment of Traders website. Okay, which you can go back to the market data and economic analysis tab. Click on Commitment of Traders, and you and you will see. If you click on the Commitment of Traders, you will see the latest report dated 28th of March. Okay, but okay, the last time that I did the COT, I don't know how many of you were here last time. I use only CFTC, and because these reports are a bit complicated, I will be honest with you. If you are a new trader, you shouldn't start from this webinar. Okay, I will be honest, because it's an advanced level one. It's a complicated report. You need to be you need to get familiar a bit with the report, how you can read it, etc. It needs some effort, it needs time, it needs concentration. So, and what I want to say that last time I covered only CFTC as a source of Commitment of Traders report, but today I decided to also show you bar chart. I found bar chart more simpler, let's say. Okay, simpler. And I will send you bar chart, and I will show you where you can find Commitment of Traders as well. Okay, in this in bar chart, but yeah, it's a bit more, it's simpler, it's more straightforward, the info over there, the how to read the Commitment of Traders, etc. So yeah, that's another source for Commitment of Traders report. Okay, and actually the good thing with bar chart, so first of all, COT reports looks like that. Okay, so you need to actually read and see, okay, the long ones are 52,000, the short ones are 54,000, so 50-50 positioning. So okay, it doesn't help me, and it says so on and so forth. So it's a bit more complicated one, but the good thing with bar chart is that, so I will put bar chart on. It shows everything in charts. Okay, that's why I decided today. CFTC stands for Commodity Futures Trading Commission. Is the name of the is the name of this regulation. Actually, it's a body like Fed, like when I lost my sorry. Okay, if I'm not mistaken, it's under the government, the U.S. government. Yes, it is under the U.S. government. It's not under the central bank. Yes, it's under the central the U.S. government, and it's an agency, independent agency, but it's an agency, but it falls under the jurisdiction of the United States. Okay, it's an agency, independent agency that collects all this information. And analyzes not only the commitment of, so right now we are discussing about CFTC, sorry. So it's an agency, independent agency. the target of CFTC is a good question. Thank you for doing that, Abraham. So CFTC, as I said, is an agency, independent agency that it collects information in order to not just because they want to give us or to present publicly reports about in regards to how the markets, the participants are positioned. No, it's not that. The aim of this agency is to protect the public, you as traders, the brokers, the institutional firms in general, to protect them from frauds, manipulation of the market, abusive practices. So this is their target. So that's why they collect all these reports and many others. That's just one thing that they are doing in order to identify any company, anyone that is trying to abuse the market, and to stop him. Okay, what's the difference between an investor and a trader? Investor, okay, investor is when you're actually buying something, shares, and you own them, right? You have investors' rights, you can vote, you own it, okay? You own it. If you're an investor for Apple, it means that you have bought Apple shares, you own them, you have voting rights, you can gain dividends, and many other plus advantages that the investor has. And it's pretty much a long-term approach. Trader is something different, right? Trader refers to you guys trading CFDs, trading CFDs mainly, but not only you don't own the thing that you bought, okay? You are actually a trade that you are actually engaged, let's say, okay, in the view that in the short term or in the long term, nothing wrong about the trader holding long-term positions, in the short or long term, saying that I'm buying this because I believe that its price will increase in few days or in few hours, in few minutes. So so this is the difference, the main difference between an investor and a trader, okay? Steve, so traders are the people who are engaged in buying and selling. Sorry, the other difference. Oh my God, it's a key difference. Investor is just buying and owns a share. Okay, the trader can sell something, can open a short position without owning that asset and without buying it in advance in order to sell it. You can go straight and sell an asset because you believe that the price of that asset, it will decline. Okay, so a trader is an individual like you guys who engage in the buying or selling of an asset in any financial market for a short period of time or a long period of time. But the big difference between the trader and the investor is that the trader and an investor is that the trader has the benefit of trading something just for a few minutes. Okay, Steve, you got it. Okay, so it's like you're telling me, okay, got it, don't continue. Okay, I will stop. Let's get back to the Commission of Traders. Yes, guys, so CFTC stands for Commission of Future Trading Commission. But as I said, we're gonna go through the reports over here, but I will also try to yes, I would like today to also, where's my bar chart? Where's my bar chart? But yes, here it is. But I would like also to emphasize today on community traders provided also from bar chart, because the good thing about it is that it's a simpler website, and also it has charts. Can you see? I click on see the commitment of traders chart for Aussie. So see, these colors are how the traders are placed right now are placed, and right now as well, for Aussie dollar, okay, and it's also splitted. You can see what this color stands for. Red stands for dealer intermediate, for dealer, and it contains commercials, producers, processors, swap dealers. You don't necessarily need to know that, but it will help you figure out how the large institutional players are based against the market, and how the small speculators are placed. So the small ones, which that counts you guys as well, is with blue. All the rest are with the commercials, processors, swap dealers, etc. with red, and small and the non-commercial large speculators are with green. Okay. Okay. Before we start analyzing, I need to keep going in order to some key terms. Otherwise, you will feel a bit lost. Okay. Let me just what else before I wanted to, okay. So actually let's start. Okay, let's start with these terms. What the open interest stands for, and the number of traders stands for, the net position stands for. Okay. Please, where did you click to get there? On the bar chart. Okay. So guys, in the bar chart, actually I'm gonna send you the link. I'm gonna send you the link, and I will just, yeah, you know what? Let's skip the slides today. I'm gonna have them and I will go back and forth, but it's better to see it in practice, I believe. So I'll get back. So, dear Samuel, in the bar chart, okay, in the bar chart, let me just get back. Go into the futures tab and click commitment of traders over here. Okay, commitment of traders. Okay, and it will lead you over here in which at the very top of this page you have all the reports based on asset class. So Forex is here, view Forex commitment of trades charts here, and then you can see that it's split it into asset classes: grains, energies, metals, softs. Okay, that's not something that we use. Then if you go further down, you can see that financial traders report, and you can find the dollar index, Bitcoin, Ethereum, Canadian dollar, not the crosses, but the actual currencies, bonds as well, and indices. Okay, so. But if you want to, sorry, there is a lot of adverts in this website, unfortunately. But commitment of traders is over here. For Forex is here. So if you click Forex, it takes you, it redirects you to here, and you can click the one that you want. If you are, oh my God, if you are an Aussie dollar trader, click Aussie dollar. Brazilian real, euro against pound, Japanese yen, and so on and so forth, okay? Okay, but before we actually go one by one to this, let's clarify some terms that are very, very important. Don't worry, in these terms, I'm explaining these terms in my slides, but also in the websites that I've provided, in the CFTC, in the bar chart, they explain again and again, they have a glossary, they explain what open interest stands for, what reportable position stands for, what commercial, not commercial trader stands for, and so on and so forth. Because if you notice, come on, we covered this, why it's so important. If you notice in the CFT, in the CFTC website and the bar chart, you can see that we have many reports. Disaggregate one, non-disaggregated one, or we have the legacy report. So we're gonna go one by one. What is the legacy report? What's the financial future report? What is the disaggregate future report? And something that I showed earlier is that when I click on the Aussie dollar, we saw with these lines that the traders is split into commercial, non-commercial, and small speculators. So all these are things that I explain in my slides, but even if you missed my slides, you can find them in these websites, okay? So don't worry about it. So let's start with the basics. Let's start by clarifying. We said that the participants of these reports are split into commercial, non-commercial, small speculators. Small speculator stands for you guys, the small traders. Small traders, more precisely. But what about commercials and non-commercials? Okay, commercial traders are usually in the market to lock in gains rather than hedge risk, and they tend to place trades in a direction opposite to the expected price direction. So let me explain this because it's a bit complicated one, right? So when an individual trader is identified, okay, the trader, even if Steve, for example, is an independent individual trader. Once the report caught him, okay, it needs to it needs to be clarified whether it's a commercial or a non-commercial trader. So all of a trader's reported futures position in a commodity are classified as commercial if the trader uses futures contracts in the particular commodity for hedging more precisely. Okay, so let me simplify. If Steve, for example, he traded oil, okay, you know that commodities have contracts. So currently the contract trader is April, but it has an expired date, and afterwards the May one takes place before the end of the month. Okay, so let's assume that Steve is trading the April oil contract. If Steve is hedging, is using this contract particularly for hedging, okay, that classifies him as commercial trader. Okay, so all the market participants that are holding a position, a hedging position for a commodity, they are classified as commercial. All the rest are classified as non-commercial ones. Okay, so to ensure that trades are classified with accuracy and consistency, the commission, the CFTC, which is the one that they are doing this, they are the ones that are providing these informations, is constantly actually they okay, I'm taking it to, I'm doing it very complicated. I don't know whether you should know this information, but actually let's keep it simple. This kind of traders, hedging commodity ones, are classified as commercial. A trader may be classified as commercial as and non-commercial. This depends on what kind of whether it's hedging commodity or not. You don't really need to know it, but it's in order to understand what is key for you to, what you should be careful about every time that you are reading this kind of informations. A single trading entity, by the way, cannot be classified as commercial and non-commercial. So Steve, for example, cannot be both commercial and non-commercial for the same commodity. If he's hedging oil right now, oil contract, it's commercial. But if at the same time you open a position in gold, not hedging, gold, along gold, let's say, then is for gold precisely is under the category of non-commercial. Okay, so a multifunctional organization like big organization, bank, and etc. That obviously they have more than one trade. You guys, I'm sure that you have more than one trade, like right? You're not trading one single asset per day. So, like you guys, institutional players or big organizations, they have more than one trading entity. Okay, so they can be classified separately for each asset. That's why if you're thinking of opening a position in gold, you should check only gold. Okay, because obviously for silver, the same organization that might trade trillions or billions or whatever, it might have a different approach for silver. So you cannot. So just this is just for clarifications. Okay, sorry. So this is how we separate commercial and non-commercial. Commercial is everyone. Institutional, small speculation, but mainly is the institutional ones, and they are separated into commercial or non commercial based on whether they are hedging or not the commodity. Okay, the forex as well. But so, what else about the commercial, non commercial? So that hedging, I'm stating here in the direction opposite to the expected price direction. Okay, hedge risk. Non-commercial, the ones that they price speculators and the trade in the direction is in the anticipated price movement. So no hedging. Non-reported traders. Yes, let's clarify that as well. Not reported traders is a very simple category. Basically, is all the positions, long or short, that involve a number of traders that are unknown. Maybe commercial, maybe non-commercial, but they are unknown. So it's not as significant as the rest of the other two categories. Yeah, that's pretty much it. Let's now see. I will get a step backwards, okay? And I will get back to the okay. And I will get back to the CFTC website. And other than the classification of the market participants, we also have different types of reports, okay? As you have noticed, I mentioned disaggregated one, the current trading financial futures report, and also the legacy one. Okay, so let's start with the disaggregated one, okay, which is in the top. You can see split per asset class, so agriculture, petroleum products, gas, electricity, metals, and others. So this is the top one. So what it is, basically, it's the report that it covers only the major physical commodity markets, okay? And is separating. If I click on it, if I click on the disaggregate futures only, you can see that it's split into producers, merchants, processor users, then swap dealers, manage money, and other reportables. Okay, is split into four subcategories of traders. Okay, so the difference of disaggregate report and legacy report, on the bottom you can see legacy. Legacy, you can see that in this table over here, we don't see asset classes, but we are seeing exchanges. So we have Chicago Board of Trade, Chicago Mercantile Exchange, Minneapolis Commodity Exchange Intercorporated, IC Futures, New York, Nodal, and etc. Okay, so so first of all, we have it per exchange center, and also if I click on it and open it, you will see that it doesn't like categorize traders. It's just split them into commercials and non-commercial. That's why legacy might be a bit more useful than the disaggregated one, even though the disaggregate with the disaggregate and this and the fact that it splits it's a bit more in detail one in regards to how the trades are separating. It helps you to avoid taking any decision um, um, by excluding, let's say, when you're reading the non-reportable positions. Okay, so you can just focus on the swap dealers manage money, on the sum of swap dealers manage money ones and processors users, and etc. What else? What else? What else I want to add? So, okay, there are no questions. Yeah, so let's get back and let's see also that one. Current traders in financial futures report. Okay, so the very last type of COT reports. So this includes, so let's open one. So it says financial. Let's open the futures only one. No, the next one is futures and options combined. Let's open the futures only. If I click on it, you're gonna see the Canadian dollar. Okay, Canadian dollar. The very top one is the Canadian dollar, and it's split into dealers, asset managers, leverage funds, and other reportables, okay, and non-reportable positions. So this report includes all the financial contracts such as currencies. So you see here we have Canadian dollar, Swiss franc, British pound, Japanese yen, euro dollar in Chicago. So on the also it mentions the also mentions the whether it's in a Chicago merchandise exchange or a board of traders, well, the center, let's say the exchange center. But the good thing about this report is that it doesn't include only currencies. It shows also US Treasuries, Euro dollar, stocks, VIX. I don't know how many of you are trading VIX, guys. VIX. And it has also the Bloomberg Commodity Index as well. But okay, this is not something that is useful. But for you guys that you prefer currency, you are currency traders, or you trade stocks and VIX, that's useful as well. So and also the fact that it has, you see, it has also the how important each column is. So here it says dealer, intermediate, asset manager, institutional, leverage funds, and other reportable. It's just they have the lowest volume, so you can understand that most of the time, actually, uh, is not something that it could change the outlook of Canadian dollar, for example. The majority over here from the position that we can see is on the, where is it? Here we are in the asset manager, institutional players. Can you see this? 87 1,000 positions, okay? Contracts, this is based on the contracts, short, okay? And if you compare it with the dealers, funds, and etc., it can be compared actually quite nicely with the 85 contracts, 5,000 contracts that they are in the dealers. But the asset managers or institutional positions are greater, and that is something that is signaling, let's say, that the majority of the big institutional players are holding a short position in the long term. There was a significant shift, actually change in a week from long position into short position, from short position into long position, sorry. And you can see the number of traders in each category, and you can see that indeed the majority is for the short one, 28. I ignore the leverage funds because we are referring to less to way less size, contract sizes and volume, okay? That's why it has been ignored. So you should focus on the very first and second categories in this report. What else about TFF report, the Traders in Financial Future report? By the way, guys, if you have any questions and you want me to explain something again and etc., let me know. Okay, it's not something easy, definitely it's not. So I'm here to reply to any questions that you might have. Okay. Okay, I cannot see any questions, and then unless there is a delay or something, so we can move on. Actually, let's see a bit what spreading is. Something that I forgot to mention. What spreading means in this report. Spreading stands for so you can see we have long, short, spreading, right? Too small on this chart, can't make it bigger. Yes, we can. Sorry. Okay. Yes. Let's do that. Okay, so hopefully now is better, Muhammad. So spreading in this case, obviously long and short, I think it's quite clear, right? The long and short are classified based on the open interest in. It sets out, so let's say, by the open interest by long and short. Now, spreading is basically is how many. Okay, no, let me is the amount, let's say, okay, is the amount of all the offsetting futures, okay, long and short position, offsetting long and short positions, held by a trader, by single trader. Okay, so you don't necessarily need to remember all of these guys. Okay, this is way too complicated. Just stick on trying to read the to compare the long positions and the short positions of the institutional players against all the rest, and how whether there is a big difference or small difference between these traders, the big traders. Yeah, but the spreading column has to do with all the offsetting long and short positions. So now, okay, let's get back. And okay, I will do a bit of an. Let's actually see a bit how you can read. Let's start with the disaggregated one, okay? Let's start with it, and let's start with the metal one. Why not the metal one? Long format. Okay, so look at that. I will have also. I want to. Okay, actually, I'm gonna bring my MT4 later on. Sorry. Let's do an example of how you can read the reports, and then we're going back to the bar chart to see how you can see read the chart as well in order to make your own conclusions. Okay, to do your own conclusion, your own, and in order to help you figuring out whether you will take any action or not. So first of all, something that I forgot to state is what is the open interest. Sorry. Yeah, open interest. I'm not sure whether I covered it or not, but open interest is the total of all the futures and option contracts entered into and not yet offset by a transaction, by delivery, by exercise, and etc. The aggregate of all the long open interest equals with the aggregate of all short open interest. Just to simplify it, remember that this is the open interest stands for all the contracts that enter into and not yet offset by a transaction. Okay. So, okay, now, okay, I have opened the disaggregate commitment of traders, options and futures combined, for commodities, okay, for metals more precisely. So the very first one is palladium. Okay, can you see that? Okay, of course you can. So let's go through it to see what exactly what it actually says, how we can read, how what the signs give us. So I want also to have the chart somewhere. Okay, I'm gonna let's read it first, and we're gonna see the chart in a bit. So split it into reportable positions and not reportable. Okay, and then separated into the traders categories as we already mentioned. So what can I see right now? What can I see? Okay, if I go through and I will just, it got into my attention that the biggest, excluding actually the management, both the swap dealers category and the producer, processor, merchant, and user category shows that the peak, the most of the positions are long positions, right? Can you see that? 2,000 contracts of 100 ounces under the very first category. Swap dealers another 6,000 again long, and the only ones that are against and going on the other direction is the managed money ones and the other reportables. But in regards to volume, the swap dealers and the producer, merchants, processors, etc., are way higher and holding more positions in the long side as well. Okay, so that shows that the overall outlook according to these positions, okay, suggests that that there is a lot of buying pressure for palladium. Okay, there is a lot of buying pressure for palladium. And if I just bring back my, actually, we haven't seen the change from last week. So the change from last week shows that, okay, that wasn't a significant change in the commitment of traders, excluding the managed money ones. So for the swap dealers and the very first category, there wasn't a significant change. It was minor, 59 contracts removed from long and went to, and just 3 removed for short, so nothing really significant. Swap dealers also, there was a tiny change in the short position, but in the long position, another 110, either closing the position or shifted elsewhere, etc. So not a significant change. So it means that the majority of them, they keep holding this kind of approach for more than a week now, actually in 2 weeks in a row. So now I'm gonna turn and see whether this is the same, what I just mentioned. It can also be interpreted in my charts as well. Remember that we have seen the changes from last week as well, right? So it shows that there is a lot of buying pressure, right? Since for the last 2 weeks. This is my palladium daily chart. I will just bring the white template on. Okay, and look at that. Indeed, in generally March and so far today, actually the last week of March and so far today, we have seen a rebound of palladium, not a significant one, but we have seen for 1, 2, 3, 4, 5, 6, 7 days in a row, extending higher and recovering some of the losses that we have seen in the mid of March. So the commitment of traders combined with what we are seeing the daily chart in palladium satisfies this signal, let's say, or this the conclusion that we made that the majority of the market, or the not the majority of the market, actually the majority of the market. Why not? The majority of the market is having a long view in regards to the palladium. Okay, obviously you cannot really like rely only on the COT report. You need to use some technicals. So having COT agree, the COT, what we concluded from the COT report agrees with what we are seeing the last 2 weeks from palladium. So have this in mind. You need to go and find out some resistance levels that could trigger could trigger a potential entry position for you guys, right? So I don't know whether you have noticed where I have just put my lines, but this is because I placed actually those two lines on the latest swings that we had in March for palladium. Where is the shape one? Sorry, give me a second. I want the rectangle. Yes, insert, close. Yeah, so I want this in color. And like, okay, give me a second. Sorry. Fill. Okay, so you see, so this area over here, okay, and more precisely the 1500 territory, round number, and also a level that has been retested on Friday, and it was a key resistance area back in the mid of March and the end of February. So this is the very first resistance area. If this is triggered, okay, this could lead to a potential retest of the next ceiling for palladium. And why I'm referring to a next ceiling is because you can see that this resistance over here, the 1533 area, has been retested 1, 2, 3, 4, 5 times. You see, we have 2 up fractals and several attempts to move above it, but failing. So that this is how you should approach the COT report, to see what it shows, what it signals, which is any the continuation of first of all buying or selling, pressure, how long this for how long this stands for. Was it something that was held also last week? So if we continue to see the same approach for several weeks, that also indicates a more medium-term approach, a more medium-term outlook and long-term outlook as well. But so the next thing that you need to do is go back to your charts and find out trigger points in order to once they a break, they could help you enter the market on time, let's say. Sorry. Is everything clear so far? The same, what we just saw in the CFTC, okay? The same, you can see it as well in bar chart, as I said, but visually as a chart. So let's get back to the bar chart. So in order for you to identify what is easier for you guys. So let's click on palladium. Sorry. So, but in bar chart, you see there is also a time frame, okay, time frame as well. So I would like to, if I keep the default one, you can see that the non-commercial and large speculators, sorry, they have increased. So what that stands for, that more and more traders that are classified under the category of non-commercial, like large speculators, managed money funds, and etc., have entered since the beginning of the year. More and more have entered this category, first of all, and you can see that it's rising. So we need to have a look on the COT chart just to clarify what kind of positioning these people have set. Are they long or are they short? So first of all, we saw in this very first, sorry, over here, what we notice is that the non-commercial or large speculators has increased and it keeps rising. It keeps rising. This class, this traders class, let's say, has increased since the beginning of the year. If I zoom in further, you can see that it keeps rising, right? Okay, so sorry. Let me just get back. Sorry, just a quick. And can you see also that it's pointing, the fact that it's rising is also indicating what we saw earlier from the CFTC is on the side of a long position, okay? Because it's positive. Can you see that these numbers are negative, these numbers are positive? So this separates the long and short position as well, along with the change per week or per yes, per week. This is per week. This is the final numbers. What else I wanted to mention over here? So you can combine. I mean, you can firstly check the report and then come back to the chart in bar chart in order to have a look as well. Yeah, the good thing with bar chart and its chart is that it also gives you some extra information in regards to the particular instrument. So you can see also some intraday information, especially for you guys that you might be scalpers, I don't know. So you see, you can also have an overview of today's performance and the last week's the last 5 days performance. Can you see that? So it shows over here that currently, so today, it opened at 1458, right? The day's lows is at 1451. The day's highs is at 1481. And is really close to the high territory. So currently it's at the high territory, so that suggests that it rose so far today. And indeed, you can see that it rose so far today with this green color over here and the plus 1.23%. Also shows you the volume, the open interest, the previous close, sorry, and the change in a 5 day, the 5 days change. So the last 5 days, so that means since last Tuesday it appreciated, it moved higher by 4%. And if you see the performance over here as well, you can see that all the changes per day, 1%, 1.5% on the 29th, 1.80%, another extra 1.80% on the next day, a bit dodgy on Friday, slightly lower, but not significant if you compare the previous percentage changes. So a slightly lower yesterday, and so far today, another 1% higher. And there are many information over here. Look at that. So that's some headlines. Okay, some bar charts technical opinion as well. But be careful over here because this depends on what kind of time frame this overall average is, this bar chart technical rating. Some technicals as well, 20-day moving average. This is stuff that you can also see in your charts anyway if you're using a 20-day moving average. And along with your indicators, these are technicals that you can see anyway by following your own plan, your own strategy. What else? So this comes in line, the indicator summary comes in line with what we have seen from what we figured out from the COT report, that there is buying pressure in the medium term, okay? But if we check our long-term chart, we can see that the long term is still pointing downwards. Okay, it's something that we have seen from the CFT report. Is something that we confirm in our chart and something that we confirm right now from this indicator summary bar chart as well. What else? What else? What else? I will do one more example, guys, this time for a currency pair. And if you don't have any questions, I'm gonna call it a date, okay? Let me just, okay. So now is the time for you to ask me anything you want. Or so here is a summary, is the key concept of the commitment of traders report. You need to keep an eye on the open interest. You need to check the price action in order to, and also to figure out, in order to see whether you have a strengthening trend or a weakening trend. So that's why the change every week matters, okay? Because it might change completely the outlook of a particular asset. So the change from last week, can you see that? The change in the positioning is something that you always need to keep an eye on, okay? Because if the change is massive, that means that something is changing on the in the outlook, on the positioning, especially at the end of each month or each quarter, like what happened on Friday. And the repositioning in the new week is something that you can see over here, okay? So for example, in the Canadian dollar one, you can see that there was a massive change in the long positions from dealers. Okay, so possibly that was an alert of closing long positions ahead of the end of the end of the month, end of the quarter, and etc. Okay. The institutional players hold their long positions, but there was a lot of uh, of a of a, positions closing in the short side of the Canadian dollar. What else? What else? What else? So since we have seen the Canadian dollar, let's actually open the dollar CAD as well. Since we analyzed a bit the Canadian dollar traders report, financial futures, trades in financial futures report. So let's open dollar CAD. Where is my dollar CAD? Here it is. So we can see this is the 4-hour chart, and I put that on purpose just for you to see the change. The fact that we had, so let me bring back the report so we can compare. Sorry, guys. I'll zoom out a bit. Actually, it might be easier in a daily time frame. So that pretty much shows and you see this downtrend. If you it was something that it was something that it was you could see it in the COT report. So it was an alert in the COT report that the Canadian dollar is under pressure and could be there could be we could see some selling pressure on the dollar CAD. And look at that, it's all these these 2,800 positions close, long position close. They had um, attributed to this sell-off. Okay, so keep an eye on what the report hints, and then combine it with your technical analysis in order to spot also any breakdown of key resistance level that comes in line with what the COT reports signaled. Okay. No. The negative digits suggest that then you will see the negative digits in the changes from last week. So that means that 200, for example, over here in the Canadian dollar one, 2,800 long contracts have closed. 2,800 long positions have closed. So it's the vice versa there, David. Is that clear? And only 241 short contracts are closed into under the dealer intermediate category. It doesn't mean seller's action. It means that okay, obviously it could lead into a sell-off for the particular asset, but it means that 2,800 traders, let's say, that they were holding a long position for Canadian dollar, they closed their long positions. Okay, and the fact that there is a positive number, a positive change in the long position under the asset manager, that means that another 800 had open up a long position, or they're holding their they have opened an extra 800 have placed a long position in the Canadian dollar in a week. Okay. Sorry. Yeah. Over here I summarize all this. Okay. Check your chart whether your price is increasing or decreasing. Then check the open interest in the COT report, whether it's increasing or decreasing. Check the changes for commercial and non-commercial traders. Okay, whether they are increasing week after week or whether they're decreasing. And that this will help you interpret if we are in a strong bull market or in a strong bear market, or whether you are the bull market is weakening, whether the bear market is weakening, and that this will help you identify what this implied activity means. Okay. Any further question, guys, before I close it a day? Or everything that we discuss, I have it on the slides as well. So all this is things that we have already covered. Any questions? Again, remember, open interest, the changes, the change per week, where the majority of these institutional players, if we sum them up, where they have position. Okay, so this is I put this obvious example. It's a backdated one, but it doesn't matter because the numbers are quite huge, and there's a big difference in the long position, the short position, and that indicates a clear. This is a clear indication that there is a lot of buying pressure. So 71 over here, plus 27,000 over here, plus another 21 in the leverage. So that's a clear buying pressure, buying boost, if you can say, for Japanese yen. Okay. Okay, that was combined with another report in the news 3 days afterwards, because this is the report that an example. This is a brilliant example, and that will help you understand even more how significant the trades and financial futures report is, and the fact that this. So you see, this is as of March 16th. So as we said, there was a lot of buying pressure, and indeed, as you can see, 3 days afterwards, yen long. It used to be long, but traders swing positions from long to short with 46,000 changes in positions. So the CFTC report in the position data, and then you can see sometimes in the news as well. Okay, this is a breakdown of the CFTC report. So you can see that for this example, we have an increase in the long positions for euro, slight decrease in pound, not a significant one. Yen, there was a massive change, so there was a clear indication that there is a clear shift of the market from short into long, and this is the same thing that we have seen in the CFTC report earlier. That was the amount of long positions were way higher than the short ones. Not significant. You see, CAT is 10K long against the 11 last week. So the change was very tiny. So doesn't help a lot. Okay, guys, yes, this is I have shared the slides there in the handout section, so please Tlamini, please download them. I have shared the links as well. This is recorded, so you will receive it in your inboxes, and that's pretty much it. So if there are no further questions, I'm gonna call it a date. Okay, anything you need, send us an email at webinars@hrfm.com. Yeah, and that's pretty much it from us. Hopefully you enjoyed. Anything you need, we are here to help anyway. Okay, thank you. Have a great day ahead. Take care. We have jolts today. Not sure whether they are out already. I forgot what time was it. Might be in 4 minutes. It might be out in 4 minutes. I don't remember exactly the time. So jolt, something that you should keep an eye on. And tomorrow morning the RBNZ rate decision. So after the RBA, we're gonna see RBNZ interest rate decision, and we're gonna have the RBA's governor on loan speaking as well. But the key event of the week, let's not forget, that is the LFP this Friday. Okay, guys, so have a great day ahead and see you again tomorrow. Bye-bye.